some upbeat sentiment filtering through despite no strong upward moves reflecting on the overall bourse. What's keeping the markets ticking at this stage of the game, and who's actually behind it?
Thank you very much, Alishia. Just as you noted there, we are seeing a bit of demand supporting the market as of now. And just as you noted, as we are going towards the close of the year, mostly we find the markets becoming a bit sluggish in terms of their performance. And also, as we are not expecting any new results or corporate actions, we don't expect a lot of activity yet. The support levels are very encouraging, especially on the banking financial front. Most of the banking stocks are still fairly strong. And looking at even at the industrial, East African breweries and others, they're still very strong. And that's a positive sentiment. We're seeing a lot of activity from foreigners. They are still buying significantly, and also retail investors are still very liquid as of now, and that is very encouraging even though we are going towards the close of the year.
On the data front, we had total loans and advances by the banking sector rise 6% in the third quarter. Personal loans increasing by the biggest margin. How have you read that data? Because again, this feeds into the entire economic recovery story over in Kenya.
Well, definitely, just as you noted there, yes, the issue of personal loans as well as asset financing, which has become very common, especially in our market now. When you peg it and look at it from a macroeconomic point of view, you're seeing interest rates are going down, and because of that, there's a lot of liquidity in the market, and banks are having to consider lending, and because of that, they are lowering their bar. Well, looking at it in terms of their non-performing loan portfolio, that's one of the major concerns as at now. Though looking at the deposit as well as lending ratio of most of these banks, we're seeing they're still well positioned to continue lending, but I guess the concern right now would be issues to do with default rates, which might go high, and the need for them to make a lot of provisions.
Exactly, because if you're looking at non-performing loans, they seem to be staying sticky. They've declined marginally by 0.5% to 61.2 billion shillings. So the argument now is to what extent banks are still struggling to get a handle, because then the growing credit market could be just as much a cause for concern as it is being read as a sign of recovery.
Well, definitely, just as you noted there, yes, one of the things that we hope to learn, especially from our economy right now, is to look at how things have happened in the European markets, especially when it comes to financing, especially lending. And because of that, there is a lot of need for banks to be a bit cautious in terms of their lending, especially now, because right now there's a lot of positive sentiments, especially because of the economic outlook. When you're doing 5.5% and such kind of economic growth, there's a lot of positive sentiments. The market is active and vibrant, and because of that, there's a lot of liberty in terms of lending, but there is need for a lot of caution, because if things turn around and in case the economic environment does take a turn, there is going to be a very big concern in terms of the position, even exposed position some of these institutions are going to be in.
Let's get an update on some of these banks' performances. Equity Bank at around 26 shillings 50, and traders saying demand being driven by the strong growth in net earnings, which we saw recently, up 51.4% year on year for the third quarter. Just how much more upside do you see on that share price relative to the fundamentals and the capacity the bank has to keep growing the way it has?
Well, the trend for Equity Bank has been very positive, and the sentiments, especially on that stock, has also been very strong. And looking at it, especially from the beginning of the year, you've seen the trend for the share has basically been upward, and seeing it hit support resistance levels of 27 shillings, we were hoping that it would be able to close the year at around 30. And basically, based on the fact that the company has been performing very well, double-digit growth, and such kind of backdrop is very, very positive for the company. And looking at it going forward, yes, the sentiments are still very strong, and even as we are going towards the close of the year, I guess people are taking positions because of the anticipation of the end of year results come February, March next year, and so it is still a relatively good buy.
In the meantime, Cooperative Bank and Barclays Bank are set to be releasing results pretty soon. They've been actively traded on the back of that. What are you anticipating on those respective fronts?
Well, Cooperative Bank, yes, there's a lot of positive sentiments and speculation also, because we've been seeing the share price dwindling between 19 and 20 shillings. Yesterday it went to a high of 20 because I guess of that anticipation of their quarter 3 results. And looking at how they have been very much in the forefront, especially the acquisition of CIC Insurance and some of these corporate actions on the stock, the demand for the stock is very, very strong. But looking at it in terms of the pricing as at now, it's still a good stock for profit taking, because we've seen it rise significantly over the last few months. And as at now, anybody who will be buying it will be more of buying it for long term. And looking at the other stocks, basically the other banks, they're still very positive and strong. And for Barclays, I guess the concern has been the fact that it seems like the strategy is more balanced in terms of it's taking the Standard Chartered strategy of being relatively conservative in expansion, as well as going to retail banking, and the adoption of M-Pesa, as well as that product is fairly positive on the market. And looking at it in terms of performance, yes, there's a lot of demand on it, and we've been seeing it oscillating between 67 and 70.
Of course, it'll be interesting to see what they're going to be doing with the cash that they managed to raise after the sale of its custody business to Standard Chartered as well. In the meantime, we're anticipating Safaricom's results later this afternoon. Broad expectations there is that we're really going to see no surprises, voice revenue pulling back and data getting into the driving seat. What are you anticipating there?
Well, definitely there's a lot of anticipation for Safaricom. Looking at the share price, especially over the last 3 months, we've seen the share price decline, and most of the investors and as well as analysts are looking at it in terms of an overreaction in terms of what happened in the market, especially because of this rivalry as well as reduction in calling rates. And because of that, we are hoping that Colimo is going to announce something positive and something that's going to keep investors positive about the stock. We're looking at how the stock has been supported, especially in the market. We are seeing the demand still pushing it and sustaining it within the 4 shillings 70, 4 shillings 80 range, and hopefully the half-year results are going to be able to boost it in terms of the demand, and we are going to see it going towards 5 shillings or towards the close of the year. But the sentiments are still a bit of a concern, especially because of that note about their revenue base.